Let's get a check on our Money Watch now to help sort out all of these tariffs. We are joined now by financial analyst Chuck Zodda from the Armstrong Advisory Group. Chuck, thank you so much for joining us today.
Absolutely. Great to be here.
Well, first off, 4 extremely rough days since the so-called Liberation Day. Where do we stand with the stock market?
Yeah, so if you look at where markets are right now, depending on the index that you're looking at, you're anywhere from down about 12 to 20% year to date so far, and a little bit more than that off the all-time highs just because stocks peaked late January, early February. So it has been a rough, really 4 to 6 weeks here in markets ever since late February, early March. And so I think that right now, investors are just sort of trying to comb through markets and say, hey, how much worse could it get in the short term? Or are we due for any kind of relief rally, even though the long-term direction of travel still isn't, that optimistic in markets?
And not every day has been a total loss. We did see a brief rally yesterday, but that was really the only hit of recovery. So are there any sectors that are prospering because of these tariffs?
Now, this is something where if you look at how markets are behaving, sure, you can find some that might not be getting hit as hard as others, but it's a pretty broad-based sell-off that is happening. It's not something where, you're really seeing these, pockets of optimism and things like that. We saw a little bit of that last Thursday, the day after the tariffs were announced, where you had things like utility stocks and consumer staples and healthcare that were rallying a little bit. But the last 3 days now, Friday, Monday, Tuesday, it really has been just a pretty broad-based sell-off across all different parts of the market. Sure, there are a few names here and there that might be doing okay, but it's not something where you can point to any one sector, any one area and say, yeah, that's where everyone's really hiding out. It's fairly indiscriminate selling at this point.
So, Chuck, let me ask you this. What do you think the trickle-down effect will be to the average U.S. household?
So in terms of what we've seen, and this is an estimate from the budget lab at Yale that they updated this morning with the new tariffs that were raised on China and reciprocal tariffs raised by China as well on the U.S., they're estimating that the average household is going to see a loss of purchasing power in the neighborhood of $4,600. Now, it varies based on, and that's for the year, just to be clear, it varies based on household incomes. So what you see is that for households with lower incomes, the dollar value is lower simply because they don't spend as much to begin with, but it's a bigger percentage of their income just because they don't make as much either. So there's a pretty big range, but that $4,600 average additional cost is what the Yale Budget Lab is now expecting in terms of the additional costs that American households are going to have to bear over the next 12 months if, and I do stress this, if all of these tariffs remain in place, because obviously I think there is a lot of chatter and a lot of hope that some of these are going to come off the board as negotiations proceed in the coming weeks and months.
Right. What are we seeing right now in terms of mortgage rates? I think there's a lot of chatter about it potentially being a good time to refinance. What's your take on that?
So rates had come down last week, actually, and we did see an increase in refinancing as a result. The issue is they've bounced back up this week, and so you're actually a little bit higher than they were going into that period. Mortgage News Daily, as of yesterday, had the average 30-year fixed rate at 6.85. Before last week, it was in the 6.75 range. Then it got down to around 6.6. But now you're back up heading towards 7 a little bit more. So I don't think we've seen a convincing and conclusive move down for mortgage rates yet. Maybe we do at some point if we start to get more actual economic data showing the economy slowing, but it's going to be, weeks and months before that shows up simply because all of the data that we're going to be getting this month is from March and February. It's all backwards looking from before these tariff announcements. You can kind of throw that out and say, hey, it's a new world since these were announced, and the old economic data isn't really that relevant anymore based on how things have changed in the last week.
Something to certainly keep our eyes on. Chuck Zodda from the Armstrong Advisory Group, thanks so much for your insight as always.
All right. Have a great day.